problem we have with Wall Street is, first off, they're not that smart. I'm telling you that as the stocks reporter for 17 years for CNBC. And they are very short-term focused. So one of the things we wanted to do is bring on some guys from Wall Street who actually try to buy things that are disruptive technologies, and people who are involved in selling people the ideas of disruptive technology. And that's what our two guests are going to talk about in the next 25 minutes right now. Ben Ruegsegger, who is right here at AllianceBernstein. He's an analyst with the Thematic Group at AllianceBernstein. Their mandate is to investigate the biggest secular changes that are going to be playing out in the next 3 to 5 years. His team manages about $3.5 billion in assets. So this is real money invested in what are, you could call, disruptive technologies. Ed Maguire is over at CLSA on my far side. He's the senior sell-side research over at CLSA America. He covers software, technology, innovations in hardware as well. He's most known for his thematic reports on disruptive technologies, and they are terrific. If you want a really good overview on disruptive technologies and how Wall Street is looking at these technologies, he puts out usually a couple a year. Come up to him afterwards, and he'll be happy to send them to you. They're very impressive. There are not a lot of guys on Wall Street. There are plenty of technology mutual funds you can buy into and technology hedge funds, but you'd be shocked how few of them are actually looking at disruptive technologies. They're concerned more with what's going on in the next 3 to 6 months, not the next 3 to 5 years. So let me move on here, guys, and talk to you a little bit about the short term versus the long term as an investor. Give me some ideas right now, Ben, that you've had in the last 2 or 3 years that have worked, and some names that we may not have heard of right now that you think are going to sort of define the future in the next 2 to 3 years. Some real names, real investments, and we're going to give you stock tickers too of what money where he's putting his money. That's what I want to hear from this guy.
So one great example of an investment we made over the last few years is actually a company you've heard quite a bit about at this conference. That's Illumina. So Illumina is driving down the cost of next generation sequencing technology. It's gone from over $1 billion down to $1,000 today. They're enabling and really democratizing this to the broader ecosystem. So that's a tools provider that actually was dormant in the market for a number of years. The value wasn't unlocked. 2012, it was up, I believe, 100%, and then 80% in the following year. And so it suddenly started to get unlocked. And so why is that occurring? Well, this technology came down to $1,000. Applications are exploding. And so the market, Wall Street, realized the value in rapid fashion there. Another area that we're investing today on the tool side, there's a company called Bruker. And Bruker is also a tools provider. And so where Illumina is involved is in genetic sequencing. Bruker is involved in the analysis of proteins. So they sell NMR and mass spec machines, which allow the analysis of proteins. So you're looking at the interaction, looking for genetic mutation, which is causing differences in protein assembly and things like that. So Bruker is a tools provider that we're invested in today.
And the symbol for Bruker is BRKR, right? BRKR, yes. Boy, Robert, Kangaroo, Robert. And Illumina, everybody knows, ILMN.
ILMN, yeah.
Right, okay. You were also very big on the concept of what's Google's driverless cars and the sensor technology that's going to grow up around that. I was surprised that you have investments in Delphi. Now, Delphi is an old-school auto parts company, out of bankruptcy, about as old school as you can get, yet you think they're going to be a beneficiary. Here's an example of a old company that still was going to be a beneficiary. And why Delphi? Why do you have an investment in that?
So if you take the two words, if you think disruptive technology and automobile, everybody immediately goes to driverless cars. But this is a continuum that we're on, and today it's much more about cars becoming more aware of their environment. So this is a huge opportunity, a market called ADAS, or Adaptive Driver Assistance Systems. So your cars are becoming much more aware. There's more content, sensors, cameras, and things like that that are being embedded into cars. And the auto parts suppliers, companies like Delphi, which already have a part in that ecosystem, that market is going from $2 billion to $12 billion in 2020. So this is the opportunity that's ahead of them.
So this is a good example of old school companies that still have some life. I want to talk about that in a minute. But Ed, you're very big on sensor technology. And there's a number of companies that are out there in the sensor space that are probably not very well known. Give us a couple examples of stocks that you're talking to your clients about.
Sure. Well, one of the most interesting names is Splunk, which is a company that builds tools that allows you to analyze the data that's being generated from the billions of sensors that we expect to instrument the world. There are a couple of small caps in this emerging Internet of Things opportunity, Digi International and Numerics, which are not very well known, but what they're doing is they're helping to build out solutions that create data basically from the physical world, and those are really at the barbell end of some of the largest companies like IBM.
Is D-I-G-I, Dog.
That's right.
Internet, Google Internet, and they do sensors. Go ahead.
Right. Well, and then there's because there's the barbell way of investing in these technology trends with the mega caps like Google and IBM. But it's very hard to get exposure to these themes with dedicated instruments.
You were also very big on numerics and Cognex. You've got investments
yes,
there?
actually one of my colleagues who follows robotics is big on machine vision. As we're seeing really the rethinking of manufacturing processes, machine vision is one of the critical components toward really the next generation robotics, and Cognex has some great technology there.
And you were talking to me about NXP Semi. Now here's a company I didn't actually know anything about, but talking about driverless cars, NXP's, the semis, the semiconductors they build, broadcast positions, right? And the symbol here, again, I'm going to tell you all the symbols so you know, NXPI.
Correct.
Tell us about why you've got investment in this.
So NXP Semiconductors is involved in a number of different areas. They have a specialization around security and identification, but they have a $1 billion business in autos today. It's growing about 10% a year. An accelerant for that will be car-to-car communication. So there was a trial that was conducted recently here in the US, and the National Highway Transportation Authority is going to be ruling and mandating that car-to-car communication is embedded in cars in the next few years. And so that's being designed into cars today. So this is cars communicating 10 times a second, their position and their speed. So if you're putting on your brakes and you're 5 cars ahead of somebody behind you, why not know that information? And so that technology is actually being embedded into cars today, and NXP is enabling that.
So this is the company that actually knows how far away you are from the car ahead of you. We all see the videos on this, but they're the ones that are actually making.
So they're making the connectivity element within the car itself.
Okay. Let me move on and talk about bubbles. We brought up a couple of things already. So 3D printing, for example. We had a wonderful presentation yesterday, and look at these amazing jazz instruments outside here. And yet we all know, those of us who are in this business, know there's been a huge bubble that happened and blew up. 3D printing, investing in 3D printing has been a very problematic investment for the time being. I know you guys are still relatively bullish on it. Yet how do you recognize bubbles like this when it's too early to get in, when you get the momentum rush that blows these stocks up, when they fall down? How do you get a cycle of investing that enables you to do this with some level-headedness and make money?
Well, part of it is gauging what's hype and what's reality. So you look at real market sizes, you realize their projections are just that, they're projections. So going to industry conferences, doing sort of feet on the ground work that is really sort of classic investing processes is a great way to tell what's reality and what's hype. Of course, that once the Wall Street hype machine kicks in, you have a lot of sell-side analysts that start pumping stocks. You have a lot of momentum money flowing in. You have to look at trading patterns as well. So as soon as stocks become trading stocks, psychology starts to kick in. So investing in these stocks becomes much more a game of understanding
but
sentiment.
That's what's amazing about it. You see, so the fundamentals at some point, it's not that they don't matter, but everybody becomes a technical analyst at some point. Fundamental analysis can only take you so far, and at some point, even guys who believe on fundamentals, who can tell me everything about what the 3D metrics are, will pull out and say, oh, by the way, the charts are through the roof. This thing is, is crazy stupid in terms of the valuations.
Parabolic,
It doesn't make any sense at all. How do you don't want to abandon 3D printing. We all know what kind of future it's got, but if somebody was interested in doing it now, what do you...
So those stocks have been digesting this year. If you look at their performance, so Stratasys and 3D Systems are two of the main players in that market, and they're down 40 to 50% year to date, right? So there's opportunities that are being created. But the important lesson is you want to do the work before it's relevant or it feels relevant. So things like quantum computing now, they're not in the public sphere. Do the work now so you understand the ecosystems in their entirety so that when some of these markers of adoption or guideposts that you've set out along the way, as we start to hit some of those, then you can actually make an investment. So 3D printing, those stocks have come in quite a bit. Now's the time to do the work and maybe take a toehold position in something like that.
But how do you do that? I mean, I'll give you the classic example is Tesla, okay? Tesla only really took off last year.
Right.
But, Elon was out 4 or 5 years ago talking about this. And I'm just bringing up Tesla because everybody knows what Tesla is, but you could bring up any small stock out there. How do you recognize the potential for that kind of stock? With the understanding that Tesla, there's a certain cult of personality that exists around a guy like Elon Musk. How do you factor that into the valuations? I'm not asking you to riff on Tesla. I'm asking you, but here's an example of a stock nobody owned 2.5
So that's where the fundamental work comes in, right? So you don't just talk to the company. They're always going to give you a bullish view of the opportunity. You talk to the battery supplier. So where's the battery technology going? Because one of the limiting factors for electric vehicles has been range, right? Range anxiety. So you look at where battery technologies are going and what they'll be able to enable. How long those batteries will be in a car before they need to be recycled. So doing that type of work, that'll give you the confidence to make that initial investment before it's on everybody's screen and you're talking about it in a Forbes article. So that's what gives you the confidence, is to do the work, not just talk to the companies themselves, talk to the enablers and the suppliers into that opportunity as well.
One point I'd make is that when companies hit speed bumps, as they invariably do as public companies, that can usually provide an opportunity for a stock to correct. And usually when there's a bit of a misstep, if you've done the fundamental work, that can give you confidence to step in and find value that the market may be overlooking.
It's really tough to do that. It really is, because we only get the great examples in hindsight. I hope some of the stocks that you mentioned will be among those. Let me ask you about companies with maturing businesses versus small companies that are startups that are going to be disruptive. We place a big emphasis on the fact, and Peter Diamandis makes this a cornerstone of his principles, and I agree with him, that we are in an era when an individual investor with a few ideas can disrupt big businesses. It's a fabulous development. I think it's great. But what about the IBMs of the world? We had an amazing presentation on Watson. Do you see what these guys are doing now? They are going to commercialize Watson now. It's past the Jeopardy. They got the greatest PR in history with Jeopardy. Now they're going to move into medicine. They're going to create personal digital assistants for virtually everything. They're pushing hard on medicine as well as finance right now. But you can see where they're going to go with Watson. How do you figure out an old school company like a Delphi or an IBM and figure out, are they still worth investing in? Are they going to survive this versus investing in a small company? How do you make those kinds of decisions?
Well, there's a bit of a sum of a parts approach that you have to take. In a sense, these big businesses or these big companies are portfolios of businesses where there may be a residual value to a declining business. But when you have these small businesses like Watson, where they've been experimenting with different business models, I tried to size the market a couple of years ago, and it wasn't quite clear how they were going to monetize that. Investors want to see how this technology translates to the P&L. Ultimately, when you see markers of disclosure, that when a business gets big enough, they say, okay, now we're going to break it out. We're going to say, it's 1% of our business, it's 2% of the business, even more than giving growth rates. That can give investors at least something hard to latch onto to have more confidence in a longer-term thesis.
What about funds? One way to do it is just buy into your fund. Here's the guy who runs a fund. He's got $3.5 billion. Let him invest for you. He'll do it. Another way is to there are ETFs out there. There's a robotic ETF. It was mentioned earlier, ROBO.
Right.
There are people who are out there picking what they think are the likely winners. For those of us who have a hard time on this, is there something wrong with not to let you toot your horn here?
Why am I relevant? Yeah. So if you look at that ETF and a number of ETFs, it's really a basket approach. So it's not picking the winners and losers. It's just looking for companies with some exposure. And so they're not sifting through them, looking at the other aspects of their business and whether that's a good investment or not. So you're getting a basket there.
So somebody's decided, this goes to the politics of indexing, I call it. Somebody's decided that we're going to take a bunch of companies who's got some exposure to robots.
Right.
We're going to create a fund. We'll weight it by market capitalization. And so we'll let the winners decide who have the most influence on it. And you're saying it's not really stock picking. You're just putting a basket together.
Right. You can use artificial intelligence and look for exposure to robotics and build a fund that way. So there's not as much intelligence, as you say, into that. Our approach is to try and pick the winners and losers, to do the early work on some of these disruptive technologies, to understand who are the companies that are going to drive this forward over the next few years, and then invest around those. And then perversely not invest in the companies that their business models are being disrupted by these technologies. So ones to avoid as well.
Yeah. How do you judge maturity? I mean, we use metaphors like, what inning are we on the 3D revolution? What inning are we in on genomics and sequencing? How do you judge relative maturities of an industry?
It's completely subjective. I mean, you can look at growth rates, and obviously, if you want to pick the asymptote of when the growth rate starts to decelerate, that's a marker in finance. But it ends up being really very specific to the market that a company is playing in. Certainly, what you want to see as an investor, and where investors start to push management teams, is on profitability. Mm-hmm. So there's this constant conflict between businesses that invest and keep their earnings low versus investors who say, give me some earnings, give me some cash flow, because that's how I value your stock.
Yeah. Ed, never use the word asymptote when you're on a stage. I'm a TV reporter. It makes me very nervous when you use Latin words like that. Pick up on this theme. I got to say something. Asymptote. I was really impressed.
So I would just add to that, I think the best framework is really to set out, again, markers for adoption. So take Internet of Things, right, which is a very hyped term these days, mm-hmm. but it's also an umbrella term. So underneath that, there's individual applications when you get down into the nitty-gritty. So take connected cars, right? How many cars are rolling off the line today with a connectivity element, right, with 4G connectivity? It's about 10% or less. That's growing. That will grow significantly this year, but that's one marker of adoption. Take interoperability of connectivity. So you've got, in the home, for instance, a lot of competing standards for communicating. So Bluetooth, Zigbee, Wi-Fi, can they talk to each other? So these devices today are being connected on a point-to-point solution, but not being able to talk to themselves. So it's an interoperability issue that we still need to sort out. So these are different things in terms of maturity cycle. It's where we are in hitting some of these things that will give you a sense of what inning we might be in.
And when you go to these management teams, and I don't mean when you go to IBM or you go to Delphi, when you go to Numerics or Digi International, or NXP Semiconductor, it's younger, more startup type of companies. How do you interact with them? What do you say to them? How do you get a sense of this, I like what I'm hearing, or I don't like what I'm hearing? Is there some rule of thumbs that you use?
So I'd say one thing is we certainly have a vision for how the world is going to play out over the next few years, but we don't want to impress that vision upon them. We want to first hear what their vision of the world is, right? Who can disrupt them? What keeps them up at night? What enabling technologies are they leveraging, right? Some of these exponential technologies we talked about here, are they using artificial intelligence? How are they using the cloud? How are they using mobile environment? So the ones that are most thoughtful, those are the ones that are most likely to end up in our portfolios.
I'd have to say it's very simple in technology. That, in a sense, the best technologies don't always win. So you want us to be able to gauge a management team that's focused on execution. A sales growth story is going to make money for investors better than the best technology argument. So you want to at least have comfort that it's a management team that has vision, that has passion, but also understands what their risks are and is able to execute.
We got a couple of minutes left. I want you to riff on what excites you most. There aren't a lot of guys who actually, on Wall Street, who know anything about disruptive technologies. You guys are two of them. You have heard, you've been here both days, you've heard what they're talking about. Riff on this a bit of what they're talking about, disruptive technologies, and what you think is going to be disruptive. Ben, what excites you most? If you want to say somebody right now, whisper in my ear, what technology excites you most? What do you think, just as an investor, excites you most, do you think could make the most money for investors in the next 3 to 5 years?
So it'd probably be just the interconnectedness of everything. So connectivity, once you put connectivity into a machine, you can update it. So you think about your experience with your smartphone today, it's very different when you give it a software update, right? So a piece of hardware can change dramatically. That's going to be moving into automobiles. As they're connected as well, you can do firm firmware updates over the air. I mean, Tesla is certainly proving out that model. So we're able to update these things in real time. It also becomes much more measurable. So if you're introducing connectivity into your industrial fleet, you know in real time the performance of those machines. So that really is going to be pervasive. So that's an underlying technology that's going to be very exciting.
So the technologies that invest in the ability to update the software, the sensors themselves.
Sensor technology is another very exciting area that we're interested in, absolutely. So it's about measurability, right? So the ability to measure things in real time and to affect them by giving them an update or interacting with them.
Ed?
I would have to say what personally excites me is a lot of the genetic engineering, cracking the genome, and some of the physical challenges and limitations that are being addressed. A lot of it discussed at this conference. The idea that we can have longer lifespans, be healthier, that over time a society that lives better can end up ultimately being more prosperous. There would be enormous implications for empowering a global population that still is very. You've got billions that are in poverty, and as you start to see this impact,
I am surprised that the technology plays in biotech is fairly limited. I mean, everybody owns Illumina. That's the problem.
Right.
There are plenty of biotech companies that are going on, but they're using a lot of the same technologies that are put out by 2, 3, 4 companies. That kind of surprised me. Illumina has been extremely aggressive. Basically, it seems to me they bought up everything at this point that's in their particular space. But doesn't it surprise you there's not more?
Well, it's the infrastructure, and one, as a software analyst, I look at infrastructure as, it's constantly deflationary whenever you're talking about storage, servers, et cetera, but the value always comes from the applications and technology. And the same thing is the case in healthcare, that ultimately it's going to be the applications, the real solutions that come from these technologies, and the way that people use the technologies that's the most exciting thing.
Our time is up. Ed and Ben are going to be outside during the break. If you want free stock tips, or you want to avail yourself of Ed's very interesting global perspective on disruptive technology. It's a great read. I strongly urge you to get a look at it. Ed and Ben, thanks very much for joining us. Appreciate it.
Thanks, Bob.
Thank you.